Luminar just reported its earnings, announced a new partnership with Caterpillar and more dilution, so here is everything you need to know. Firstly, Luminar reported its Q4 earnings on March the 20th in the after hours. They announced a new partnership with a major industrial equipment OEM with start of production for initial vehicle platform targeted for 2026. That industrial equipment OEM turned out to be Caterpillar, but more about that later. Luminar and an OEM, which the CEO later confirmed to be Mercedes, decided to transition development work from customized Iris Plus product to unified Luminar Halo platform. And this is their whole plan going forward, to transition customers from the Iris family to Luminar Halo, which will allow them to reduce costs and accelerate their path to profitability. Now going over their cost actions update, they reduced their quarterly operating expenses to $55 million, which is about $10 million worse than what I was expecting. But I was making my estimation based on the assumption that they would have fully realized their savings from actions taken in September. In reality, their plan to get an additional $80 million in annual savings from those actions is still in progress and is expected to finish by year-end 2025. At the end of this year, they expect their quarterly operating expenses to drop to about $30 million. Before we go into their 2025 guidance, let's go over their Q4 financial results. They've generated $22.5 million of revenue, up 45% quarter over quarter, beating their own guidance as they've shipped more than 4,000 LiDARs in Q4. They have also finally hit gross profit, but the majority of that is a result of transitioning Iris Plus development work to Luminar Halo. On top of that, they've made higher sensor sales to non-series production customers at substantially higher average sales prices. Meanwhile, their cash and liquidity came in line with their guidance. And lastly, let's go over their 2025 guidance. They only expect their revenue to grow by 10 to 20%, while they're expecting a 3x increase in LiDAR shipments for series production, assuming sensor shipments of 30 to 33k versus 9k in 2024, reflecting a 50% discount to IHS forecasts. Now, the thing is that these IHS forecasts generally deviate from the actual numbers by 5 to 10%, which makes me think that there is a very high chance that they'll beat their 2025 guidance. Having that said, growth will be offset by full year impact of previously renegotiated non-series production contracts, so their shipments for series production will at least triple, while their non-series production shipments might also increase, but the revenue from those non-series production LiDARs might be lower than it used to be. That's important because their non-series production sales were one of the main reasons why they've achieved gross profit in Q4 2025, and as you can see, they expect to post a quarterly gross loss through 2025 because assumed series production volumes are not yet sufficient to drive positive gross margin for Iris, which is why they expect gross loss to be in the range of $5 to $10 million per quarter through 2025. As I've already said earlier, they expect their quarterly operating expenses to fall to about $30 million by the end of the year. And finally, cash and liquidity. They expect to end 2025 with more than $150 million in cash and liquidity. And here is the main stinker of this earnings report. They expect to issue about $30 million worth of shares per quarter on average on their equity financing program, meaning that in 2025 they'll generate $120 million from diluting their shares. Now, in the earnings call, the CFO said that they were in no hurry to dilute their shares, so we could assume that most of the dilution is going to happen in the latter half of the year when the stock price is hopefully substantially higher, because if it happened now at the current market cap, well, we'd be looking at about a 50% dilution, but that's not the full extent of the potential dilution. On March the 28th, they filed the S3, which gave us insight into how much the shares can get diluted by. Firstly, they can raise up to $100 million in shares, debt securities, warrants, or a mix of those. Let's say they decide to raise it solely with shares. Secondly, they can raise up to $209 million by selling shares under the ATM program. And thirdly, they will issue 1 million shares to TPK, which is a Luminar's manufacturing partner. None of this dilution has happened yet, but in total they could potentially raise $309 million by diluting shares, plus 1 million shares to TPK. If they decided to do all of that at once today at around $5 a share, we'd be looking at a 188% dilution. There is one more thing they mentioned in the earnings report. They'll continue to reduce convertible debt and upcoming maturities in a disciplined transparent manner, and on March the 23rd they announced that they'll exchange $18.2 million of notes for newly issued shares, meaning that $184.9 million of that maturing at the end of 2026 still remains. This begs the question, do they plan to pay off this whole debt by issuing new shares? If that were to happen, we could see even more dilution. Having that said, it seems like Luminar knows what it's doing regarding the dilution, because this exchange of notes for newly issued shares happened at an average share price of $9.32, which was much higher than the actual share price during that time frame. Now here's what I think this dilution means for the company and its shareholders. Firstly, the dilution is good in a sense that bankruptcy is now off the table and the company can easily survive until the end of 2026 when Luminar Halo starts production. It's also good in a sense that all of the necessary documents are now released, meaning that once the dilution actually happens, we'll know by the time it's done, so there shouldn't be any negative catalysts left in 2025. As for the shareholders, well, simply put, the dilution is catastrophic if it happens at the current share price levels while the stock continues falling. But if the stock rises to more than a $1 billion market cap, the planned dilution becomes minuscule. And for that to happen, Luminar has to continue to announce positive news, like recently Luminar announced a collaboration with Caterpillar on industrial autonomous solution. The Luminar LiDAR technology will be introduced with CAT command for hauling, initially targeted for quarry and aggregate operations. The CAT off-highway truck will feature two iris LiDARs with a unique integration system designed exclusively for Caterpillar. This news is amazing because it can act as a stepping stone for Luminar, expanding to other industrial equipment manufacturers or other adjacent markets. The revenue from this collaboration probably won't be huge due to low production volumes of these trucks, but the revenue will likely contribute to grow a positive gross margin due to LiDAR selling at higher ASPs. Following this announcement, Luminar CEO had an interview with Bloomberg in which they discussed the Caterpillar partnership and the recent news about Hesai winning Mercedes business. Austin Russell confirmed that Mercedes partnership is ongoing and that they just transitioned the development work from Iris Plus to Luminar Halo. I think that Mercedes will have Luminar's LiDAR bought in 2027 at the earliest, and even then it might be available just as an option. Luminar also shared the news from Gothic, which recently announced that they're collaborating with Nvidia to accelerate mass production of Gothic's Level 4 autonomous trucks, each of which are equipped with 4 iris LiDARs. Now, I couldn't find how many of these trucks they are currently producing and how many do they plan to produce, but just recently Isuzu, the company actually making these trucks, announced the establishment of a new production facility in South Carolina coming online in 2027, which is anticipated to have an annual production capacity of approximately 50,000 vehicles by 2030. That would equal to about $200 million in annual revenue for Luminar. Additionally, Luminar, with the help of Volvo and Nvidia, conducted hundreds of demos of their LiDAR technology at the Nvidia GTC. If you want to see my portfolio updates as soon as I write them, get notifications when I buy or sell a stock, and see my whole up-to-date research on the stocks I'm holding like Luminar Technologies weeks before I make a video, you can subscribe to my Patreon by clicking the link in the pinned comment. Having said all that, this is purely for entertainment purposes as I'm not a financial advisor, and if you want to see more of my content, click on the video just popped up. If you like my content, make sure to subscribe, and thanks for watching.